Okay, so today's lesson will be focused directly to financial accounting, IFRS 16, that is lazy. So, as a background of what is lazy, as you know, lazy is simply means that to rent something. Then, if you still remember on your previous study, we have a operation lazy, then we also have a finance lazy. So, Um, operation lazy is normally recorded as an expense on your profit or loss statement or on your income statement. So finance lazy is basically recognized as an asset. So IFRS 16 is more basically focused on finance lazy, not operation lazy. So okay. Um, Firstly, you have to understand the main component that contain a lease. Remember, before we recognize an item as a lease, it must first meet a certain requirement. Alright, so I just laid down this definition in a very simple form. Alright, lease definition must meet to be regarded as IFRS 16. If one of these conditions is not met on your scenario, simply means that that is not lazy. You have to refer to other accounting standard. Simple as that. Alright. Then number one, there must be a contract. If on your scenario that you are thinking that is lazy in terms of IFRS 16, there is no contract. Simple means that it's not IFRS 16, go to other standard. Alright, number two, there must be right of use. If you have been given something um, and they say you have leased this item, you must have a right to use that thing that you've been given. It can be house, it can be a vehicle, it can be any other assets that you can use as a lease. So you must have the right. So if there is a right to use that item, simply means that you are getting there to IFRS 16. Alright. Then number three, there must be identifiable assets. You can't say you have leased something or you have rented something that you can't even identify what you rented. It won't make sense. So, like for example, if you are saying you have rented a house, we must be able to identify that this is a house that you rented. Then that's number three. Then number four, there must be payment exchange. So if a other company or if someone give you an asset for free, that's not lazy. It's other thing, maybe you can call it donation. It won't be lazy and we won't apply IFRS 16. So in order to apply IFRS 16, there must be exchange of cash. There must be payment that have been made in order for you to rent that identifiable assets. Simple as that. If it is free, it's not lazy, go to other standard. Alright. There must be term of lease. In your contract that you are agreeing that you are renting a specific item, you must agree that we are doing it for how long. If you didn't specify that, that's not lazy. We won't go to IFRS 16. Simple as that. So if all this met then we recognize it as a what? As a IFRS 16. This all condition must met. Simple as that. Okay. Then a hint. Lazy has a different form of questions. Be familiar with all of them. So Guys, most of the students, they have that problem of practicing one paper, and they think they know everything from that standard. It will give you problem one day, cause there is a different types of question that you can be asked in terms of IFRS 16. That will come in a different form that does not apply the same principle that you practice in the previous paper. So make sure that you are familiar with different types of question. Then the first one, you can be given the option to extend the lease of contract at the end. So if you've been given that type of question, then there is a specific principle that you have to follow. Then the other option is the option to purchase the lease at the end of the contract. All right. On the first option is to extend the contract. If we agree that the contract is 2 years, then there might be an option that I'm gonna extend the contract at the end. Then the second one is option to purchase. I might have the option to purchase that assets at the end of the contract, which means on the first option you're still gonna continue as a tenant or as a renter, as a rental person. The second one, you will have the option to do what? To purchase that item to belong to you forever. Okay, then on this option, we check the probability to conclude. So the treatment won't be the same. It will depend whether the option to purchase, there is a chance or there's no chance. Okay, basically, if the chance is low, simply means that we assume that uh, that assets will never belong to you. But if the chance is higher, we have to treat that transaction as that item will belong to you at the end of the lease, because the chance is higher. Normally the chance, if the chance is more than 50%, we assume that that asset will belong to you at the end of the lease. So the treatment won't be the same, which will change every calculation. Be careful. Even the option one, if the extent of lease, the chance is higher, it won't be the same as when the chance is low. So be familiar with those four types of question. It's four, because each option you have two different questions. Okay, so the one that I have that I took from the previous paper is option to purchase the assets at the end. Alright, then it's 24 marks. It was question 3. Then let's go to required first. With the reference to IFRS 16, discuss how Trojan Ltd should classify the transaction above in its financial statement for the year ended 31 December 2015. 9 marks. Remember, 9 marks simply means that 9 point. Okay, now we are discussing how this company will classify this transaction in terms of what? IFRS 16. This question is very simple. Okay, what do we do? In other words, we are discussing whether it will meet the requirements of IFRS 16 or not. Where are you going to get those points? Simple. If you have a IFRS standard, you can use it to refer from the definition of IFRS 16, but that will waste your time because the definition is not that long to cram or to study. Alright, remember the components that we were reading at first? That's the same components that is going to assist you to discuss that question. Alright, let's read the scenario, then try to answer this 9 marks. A very free marks. Alright, on 3 January 2015, Trojan Ltd entered into a contract with Rent In Limited. Let's stop it there. On 3 January 2015, Trojan Limited entered into a contract. Simple means that the first part has met. What you have to do first, you said there must be a contract. You are copying the principle from IFRS. Then, the second part, now you are answering what you said on the first point. Then you will say, on 3 January 2015, Trojan Limited entered into a contract to indicate that there was a contract on 3 January 2015. Alright. Then, with Rental LT Limited, that conveyed the right to Trojan Limited to use the machine RX1. Okay, there is a right there. Ne? But let's proceed first. Renting Limited does not have the right to substitute machine RX1. Okay, why? What happened here? Is there any right? Number 2, is there any right of use? Yes, there is a right of use. A limitation or in a contract, ne? Let me give you for example, I can give you a vehicle to use it to go to work, which means that you have the right to drive the car to use it to go to work. But if I say you don't have the right to change the tire, that does not mean that you don't have the right to use the vehicle. But you don't have the right to substitute something that belongs to my car. Does not prevent it from requirements number 2 of right of use. There is a right of use in this case. Alright, then you know how to answer, then you will do so. Okay, then the contract is for 5 years and Trojan Limited will exchange the pay of 225 per annum. Then the implicit interest rate in the contract is 12%. Then Trojan Limited has an option to purchase machine RX1 for 80,000 at the end of the contract. Then there is a 90% chance that Trojan Limited will exercise this option. Then on 3 July, it was estimated that 50,000 will be obtained from selling machine RX1 at the end of its useful life of 8 years. Alright, I read everything. Now let's go to other component. There must be identifiable assets. Is the assets that we have identifiable? Yes, machine RX1 is identifiable. Okay? There must be payment exchange. Yes, there is a payment exchange of 225,000 per annum, which means that requirement is okay. There must be term of lease or a period. Is there any term of lease? Yes, the contract is for 5 years. That's a term of lease. Simple as that. Then we concluded that it will be treated in terms of IFRS 16 as it meet all requirement. So that's how you will get that 9 marks. Simple as that. Okay, now let's go to number 2. Prepare the journal entry to recognize the above contract in the financial record of Trojan Limited for the year ended 31 December 2015. 15 marks. Okay, there is a marks for calculation as well. Remember, in this case they say there is a 90% chance that Trojan Limited will exercise this option, which means that our case will fall under the option to purchase. Then the chance is 90%. which means that in this case we have to assume that at the end of the useful life of this machine, at the end of the lease, we are going to buy this machine because the chance is more than 50%. All right. Now let's try to answer number 2. Okay. How are we going to answer number 2? Number 2, they say prepare the journal entry. Okay. So the first step is to recognize the cost price of machine. So what is the cost price of machine in this case? Do we have it? No, we don't have it. We have a exchange price of 225,000 per annum, which is not our cost price. Our cost price is a present value. It's a present value. All right, we have to calculate present value. We don't know the price of present value. Then our I, we know it is given on the scenario is 12. Then our N, contract of lease, is 5 years. Is 5 years. Then our PMT is 225,000. Okay, PMT and future value, you can use negative. Okay. All right. Then what will be our future value in this case? Future value, we only account for it if the chance is more than 90%. I'm repeating. If it's more than 90% chance, then our future value will not be 0. Why? Because we are going to pay something. We are assuming that we are going to pay something at the end of the lease. Because the chance is higher. Okay? But if the chance is low, it's the different case. So I will also do the other question, which the chance was low, to another video, so that you won't get confused when you go to the test. Okay. Then how much are we going to pay at the end of the lease? Okay. They say Trojan Limited has an option to purchase the machine for 80,000 at the end of the contract. Simple means that we have to subtract, we have to say negative 80,000 because we are going to pay it at the end of the contract to obtain the lease, because the 90% chance. So if it's less than 90% or if it's less than 50%, a future value was going to remain 0. Okay, we will do that on other lesson in detail. Alright, now we have to calculate a present value. Okay, we have to calculate the present value for this item. Make sure that your present value is very correct. Why? Because if you don't get this one, you are not going to get anything. You are not going to get anything at all from this question. Alright, let me use the financial calculator, which is online, because I don't have financial calculator. Okay, then a period is 5, interest is 12, present value is 225,000. So just ignore the dollars. Okay, then we're gonna have 80,000. So on setting, please make sure that your financial calculator is on at the end. Why? Because the payment will be made at the end of the year. So you have to check the date. If they said it will be paid at the beginning of the year, adjust to BNG. Simple as that. Okay. Then our future value. Let's see what is our future value. Our future value is 904 and 754. 904 754. Okay, 904 754. Okay, let's go back to the equation. Okay. Okay, we got 904 754. If it's not correct, you will do calculation, then you get the correct answer. Okay, so that will be our cost price that we are going to recognize on our journal entries. Then our journal one will be, we are going to debit machine. Then please indicate whether it's SFP or PNL. Okay, then we credit lease liability. Then it will be SFP. Okay, I think for this part it's not that issue, so that the video will not play that long. Okay, 904 754. Then we do the same even on this side. 904 754. Okay. Then the next journal D2 will be of interest. Okay, interest expense. I prefer journals in this way, in separate way. Then lease liability. We recognize the expense. Then expense, you know that the interest expense will increase our lease liability. Okay, so how do we calculate this one? We calculate it from the interest that you are going to get. You calculate it from the present value that you got. Then you just punch 12%. Okay, in that case we don't have to calculate a month because it was 3 January over 100. Okay, I think you're gonna get. Okay, if I move from this document, I'm not going to get this figure again. So let me just estimate. Okay, then when you calculate, let's say for example you get 1,200. Okay, let me just try to do so, so that we do using the actual figures. Okay, let's just go to calculator. 904,754 multiplied by 12/100. Okay, we're gonna get 108,570. 108,570. 108,570. Okay, 108,570. Okay, then we're done with the journal number 2. Then journal number 3 is payment. So please, guys, I know some of you might prefer the journal which we are going to prepare, this journal with payment together. So I prefer you do them separate. Why? Because the payment, even if you didn't get the present value, the payment part you are going to get it. Lease liability. You are going to debit it because it's going to reduce the liability. So the amount that you use in this case, you just take 225 that we have on the scenario of payment. Then you indicate by crediting bank that we have paid. We took money outside of our bank. So I prefer General 2 and General 3 that you please record them separate, so that if you miss up with the present value, because you are not going to get the interest, at least you will get this General number 3. Okay? Then J4 is depreciation and accumulated depreciation. Okay, now we have to go back to the scenario and see how are we going to calculate this one. Okay, depreciation in this case of 90% is not the same as the less than 50% one. Why? Alright, if there is a more than 50% chance, we have to use useful life to depreciate. But if the chance is less, we have to use the term of contract or the lease term to depreciate, which means that in this case we are going to use the useful life of 8 years to depreciate, and we are going to use the 55,000 that we have been given. Alright, let me read this part again. It was estimated that 55,000 will be obtained from selling machine RX1 at the end of its useful life. Okay, sorry. Okay, this 55,000, we call it residual value. This is the amount that we are going to receive after selling it at the end of 8 years useful life. This 55,000 is not the same as 80,000. The 80,000 is the amount that we are going to pay after 5 years. Us, we are going to pay 80,000 after 5 years to obtain that machine. So after 8 years of useful life, after we've used this machine, we are going to obtain 55,000 if we sell it, because it's a what? It's estimated as a residual value. Okay. I hope you learned something. Okay. So how are we going to calculate depreciation? Firstly, we have to take the cost price of 904,754. Then we have to subtract residual value of 55,000, because the chance to purchase this asset is higher. Okay, then after we subtract this, we divide by 8. Why 8 in this case? Because the chance is higher to obtain these assets at the end of useful life. So we assume it as is it belong to us. So we have to use the useful life of an asset. So we don't calculate a month in this case. Then please calculate it and get the answer. Okay. Then the last journal is a current portion of a loan. Alright. So basically, to get current portion of a loan is either you do amortization table or you do the separate calculation. All is accepted. Whether you use the amortization or you use your own calculation, you're gonna get the same answers and you're gonna get the same marks. So it will depend on your preference. So myself, I prefer that I don't waste time to do amortization table. I just do calculation as usual, then I will go for good. Alright. So what is alright. This part, what you have to understand first is that we are looking for capital portion with no interest. I don't know if you understand, but we are looking for, remember, the payment of 225,000, it has include the interest. So the one that we are looking for of current portion of a loan, it doesn't have the interest, but it's capital for next year. Okay, let me write it down. Current portion of a loan is a capital amount with no interest of the following year. Alright, I think this statement is clear. So the journal for current portion of a loan is look like this. It's lease, liability, then you credit current portion of a loan. If you still remember, current portion of a loan, in other words, you are subtracting it from non-current liability and you add it to what? To current liability. Why? Because it's going to be paid within next year. Simply means that it's no longer going to last more than 12 months. We have to take it out from non-current of more than 12 months and put it on current of less than 12 months because it's going to be paid next year and it is now less than what? 12 months. Okay, now let's calculate it. Let's fight for it. Alright. Firstly, to get current portion of a loan amount, we must calculate the interest for next year. Then we subtract it from 225. Again, we know that we are going to pay 225 each and every year. So even next year we are going to pay 225, but we have to subtract the interest of next year so that we get the current portion of next year, because the current portion of this year is not the same as for next year because the interest change each and every year. Okay, let me start with this calculation. How are we going to get it? Remember, at the beginning we owe 904,754. Firstly, we have to add the interest. that we gain, which is 108,570. Then we subtract the payment of 225,123. So after that, you are going to get the amount of the balance at the end of the year. You are going to get the balance. I don't think I will manage to calculate this one, because it will erase everything if I leave this part. Okay, so calculate it, then get the balance. So this balance is the one that we are going to use to calculate the interest balance at the end. Then we start, then we say balance at the end, then multiply by 12%. You will get the interest of next year. Because the interest of next year is calculated by the closing balance of this year. So after you get the interest, then now you come and say 225. Please don't subtract the interest of this year, because it will not be the same as the interest of last year, because of last year we used 904. For the next year we are going to use for the new balance. Okay, 225 minus interest. Then what we are going to get, we call it current portion of a loan. Okay, then after that you are going to do what? To do the adjustment on the journal. Simple as that. You can get it without constructing a table. Alright, so that's it for this lesson. So I'm going to upload the next one, trying to explain the option that will be less than 50% chance of purchase. So please make sure that you subscribe. Then when I upload, you will get the notification bell for the next video. Alright, see you.